Welcome to another episode of the Weekly Crypto Check-In, recorded on November the 27th, 2024. I'm your host, Robert Swarthout, and I'm joined by my co-host, Andres Sandate. Good morning, Andres.
Hey, Robert. Happy early Thanksgiving. Hope you're good. I know it's been 2 weeks. How you been?
Been pretty good. This is a little bit different for us. We normally record in the afternoons. We're doing this one at mid-morning, so hopefully we're awake and we say things correctly.
I've loaded up on caffeine because we've got so much to cover. It's been 2 weeks and the kids are out of school. So I've got to get a lot done in the mornings because by about 3 or 4 o'clock, they're bouncing off the walls and this house is combustible. So let's hop in.
Sounds good. Well, much like we always seem to be talking about Bitcoin, we're going to get this one out of the way because there's a lot of other stuff that is not Bitcoin centric. So,
right.
All of crypto has done really well since the election. We'll just say that up front. Bitcoin is up 30%.
Yeah.
And obviously from a very big number to begin with, it sits at, 90, just shy of 95,000 this morning. This is the day before Thanksgiving. And it's been, many other cryptos are much up a lot more than 30%, but this one obviously catches the news because it's the biggest. So it is.
And I put, we put that headline in, and I pulled back to 92 because it was roaring, there for a month. It was
up at 99,500. It was teasing.
Right. Right. And then it seems like at 92, it kind of, maybe there was some technical factors as you talked about that.
Right.
It's sort of paused there for the last day or so. And then this morning you look at what's going on and, it's up 3% today, up approaching 95. So it'll be interesting over the next 4 or 5 days with a lot of people. I'm going to say home. There's a lot of people still working, but a lot of people paying attention to the markets. And I think there's a lot of folks that are going to be watching a lot of TV and looking at a lot of internet. So I'm thinking over the next 4 or 5 days, we're going to see some really interesting price action.
Yeah, it'll be fascinating because this time last year crypto was up for 23, but it wasn't what it has done this year. And so it'll be much more of a conversation piece potentially.
Yep.
And just to kind of frame where crypto's at, it's at a $3.4 trillion market cap. It is up considerably this year, and it's I think.
I was going to say it's up. I pulled some of the indexes and performance. So year to date, Bitcoin's up 114%. That's over $50,000 per coin, and then just in the past month, it's up 41%, which is about $27,500. So I remember earlier this year when we were doing the show and we were in the 20s, right? And as we talk about, it's always a challenge when you're going a little bit against the herd, right? As an investor, and you see all these other things that are going well, and nobody wanted to really talk about crypto and Bitcoin, and there was uncertainty around the election and regulation and all sorts of other things we'll talk about here today. But not that we're in the clear by any stretch, and we're certainly not offering advice. It's just it's definitely a new day.
Yep. Yeah, it's I would say crypto, for the people that are paying attention, there has been a lot going on. The price has been up, all that stuff. There's been a lot of people outside of crypto that just haven't paid attention, which is fine. We haven't got to the euphoric stage where everybody that you see in public is talking about crypto and how to buy the Doge or whatever the meme token is at the time. So we're not there yet. And I didn't put it in our notes, but I have been thinking about, I think from now and for a good while, each time we do a podcast, I'm going to basically mention what ranking the Coinbase app is in the App Store. You kind of watch that over through a bull market. And when it gets to number one, that might be a signal that it might be time to get some liquidity.
Well, we have some other signals I think we've talked about, which are coming later in the interview. And then the other one that I always pay attention to is Super Bowl ads, right? So if you remember the last time we saw a lot of crypto advertising when there's 110 million people watching one event on TV, it was, the last crypto bull market. So, we're 7-10 weeks away probably from the playoffs starting, and the Super Bowl's obviously not till February, but it'll be, a lot of those ad conversations are happening right now. So
100%.
Yeah.
So we can say this: Coinbase is number 6 in the App Store for Apple in the free finance apps. So we'll watch that one over time. That will certainly move up the list as things get more euphoric.
Yeah.
So the other piece about Bitcoin, just generally, is the ETFs. We've talked a lot about these. The BlackRock IBIT ETF in particular is far and away the leader. It passed 40 billion in AUM. The ETF group as a basket has passed 100 million, or excuse me, 100 billion.
100 billion, yeah.
So that's well beyond anything anyone had ever thought would happen this year. I think the initial estimates were maybe 30 to 50 billion, and it is trounced that. So,
and one of the bigger names that we saw when polling.
Hey, Andres, I think your mic just died. I'm going to repeat what he said. I think his mic just died, and he's talking. So, basically, a big name, Paul Tudor Jones, became a top 10 holder of IBIT. And Andres, if you can hear me, I think your mic died. So I'm going to keep moving on while he works on his mic here. So we move on to the next topic, MicroStrategy, which is kind of still bleeding into the Bitcoin stuff. Certainly, they have really started deploying their major purchases of Bitcoin. Their capital program of 42 billion. Just over the basically the week of November the 18th through the 24th, they bought 55,500 Bitcoin for 5.4 billion. This brings their total Bitcoin holdings up to 386,000 and change, worth approximately 37 billion. So they're almost doubled in value from what their basis is. But it's pretty crazy to kind of see the tear that they're buying at. MicroStrategy alone is buying more Bitcoin on a daily basis than is minted. So all the other demand is basically creating, I guess, buyers in the market. So. So I'm going to move on. The next one, the CBOE has launched Bitcoin spot options trading. That happened roughly about a week ago, and the first day was incredible, the amount of volume. It was something along the lines of just like 1.5 billion notional value. So it was a tremendous amount of options trading. It has since paired off a little bit, but at the end of the day, it's just another tool for the institutional investors to use when they're deciding to trade the ETFs and or just Bitcoin in general.
The development of these markets, as you start getting options and derivatives and the ability for traders to express views on asset classes, long and short, hedging, is going to bring even more market participation. So this is a big development, and I know that one of the things that at least folks that are pro crypto are paying attention to are how the different regulators are going to get much more hopefully integrated and start to communicate so that these markets become even more liquid and more developed, and you see tighter spreads and you see a lot more level of comfort from asset managers and banks and other bigger institutional players to get involved.
Absolutely. And I guess more of the traditional finance world kind of creeping into crypto is kind of our next topic here with Cantor Fitzgerald acquiring a 5% stake in Tether. So Tether is the largest stablecoin, is backed by dollars and dollar equivalents, short-term treasuries, that kind of stuff. And they took I believe it was a 5% stake for roughly a $600 million purchase there. Tether is an amazing business. They have a very small number of employees. I think it's like maybe 3 or 4 dozen employees, and they're throwing off billions of dollars a year because pure interest, where interest rates are these days. They're getting to reap their reward. And Tether has a market cap, let me look real quick, of 132 billion. So there's lots of even a 4% interest rate, that's a lot of money.
And this is Cantor Fitzgerald is a name that for folks that are retail investors, individual investors, the name may not jump out. Although if you're reading the news headlines, you've probably heard the name Howard Lutnick in the news a lot. He was basically heavily involved in now President-elect Trump's transition team, supporting a lot of efforts to fill the cabinet. He was a leading candidate up until about a week ago for the Secretary of the Treasury post. He's now going to be running Secretary of Commerce, I believe. And Karen Fitzgerald does a lot of work from an institutional market making perspective. So if you think about ETFs, for example, and how ETF issuances are created and made, and the liquidity that happens to support trading, Karen Fitzgerald is heavily involved in those types of markets. They were also famous for having lost a lot of employees, on 9/11. Their offices were on the 100th or 110th floor, of what was then the World Trade Center. And, a lot of people didn't think that the firm would survive. Not only have they survived, but now, they've survived. Howard Lutnick ran the company then. And now, now you fast forward 20 plus years, and they're in the thick of, the crypto space. So my sense is that we're going to see a lot more of these institutional market makers that are heavily involved in sort of what I call the plumbing and the greasing the skids of trading and market making. Start to get involved if they're not already in crypto and blockchain technology. There's just too much money, to be made.
Yep, absolutely. The part that surprised me was, so Tether is based in the Caymans. Obviously you can purchase a business anywhere in the world, but Circle being based in the U.S., actually they have moved their headquarters to the world, the new tower that's actually built in place of the World Trade Center there. So
yeah,
kind of fascinating. I'm sure there was maybe potential discussions there, but obviously worked out for Tether. Moving on, our friends at the SEC are packing their bags, Andres.
We're going to have some leadership changes.
You know what? I tried to call Gary and ask him if he needed help, but he
you and
didn't
many
answer
others,
my call.
I bet. Yeah. So he's announced, he being Chairman Gary Gensler, he's still the chairman of the SEC. They are still working. They are still doing their job. They are still announcing a lot of actions, but he announced that he's going to be stepping down. Is it January 20th?
January 20th for him. Yeah. And then Jamie Lazarg, I think is how you say that, is going to step down on the 17th. So a few days prior to that. So
who's another commissioner on the five panel.
Yes. So that's both Democrat appointed commissioners in that case, Gensler and Lazarg. That leaves 3 commissioners, 2 Republican and 1 Democrat. Obviously, Trump will fill those other 2, and obviously, in I guess in the midst of that, appoint a head chair. But it'll be interesting to kind of see if anything gets done within that group, at least meaningful, that bubbles up to news, because now the Republicans do have control. They didn't have control of it before. Both of the Republicans, so Peirce and Ueda, that is left, have both been very vocal about wanting a crypto, basically sandbox that tokens can play in for the first 2 years to kind of grow their way out of what probably looks like a security. And also you have all these court cases. There's 200 plus cases out there. We only talk about the probably top 2 or 3. Yeah. And you can see a thought forming around, at least in the cryptoverse, about potentially if a new chair comes in, or even before, maybe that there's all the crypto cases that are non-fraud related, basically just regulation by enforcement. They either get dismissed or quickly put to bed. And then the ones that have fraud kind of get to move on. And admittedly, it sounds like the majority of them are not fraud, the large majority of them. So maybe we'll get some cleanup. I think most of that will get cleaned up by next summer. I think it'll take a bit, but we should see progress pretty soon there.
Yeah, I mean, there's so much speculation right now about who are going to be the chairs, and most importantly, the chairman or chairwoman of the SEC, who is put up for that position. Obviously, crypto is not the only asset class and not the only space where the SEC has priority. It's just been an area, when you piece everything together between the cabinet positions and those that are, have the ear of the president. I think the industry is looking for someone who can bring the CFTC and the SEC and these other regulatory bodies, not to mention, and probably most importantly, is capital still into the room, and obviously there's going to be a lot more crypto influence now. We just talked about Cantor Fitzgerald, you talk about BlackRock, you talk about what we're gonna mention here, Schwab later, like these big influential players. Now that they see that there's not only market demand for crypto, thus the 40 billion, but they see that there's potentially like a path forward for regulation. I think it's going to be a very, very busy 25 to try to get legislation in place.
Yeah, if I could make a vote for who my chairman or chairwoman would be, I would vote for Brian Brooks. He did an amazing job at the Office of Comptroller. He's very crypto forward. He was a legal counsel at Coinbase. Like, he gets crypto, and he's like for crypto.
Well, I think we have to step back and sort of look in history and say like, nothing against Gary. We don't have an agenda like against him. We just wanted to see regulation. I think a lot of people, though, several years back were very excited when he was named.
I was included, admittedly. Yes,
right.
Yeah.
So I think there's something to be learned there. Is you know, I don't know, I don't know a lot about what Gensler was saying. I know that he was teaching at MIT and was doing courses and classes and was seemingly all about the technology, but that seemed to have changed pretty significantly once he got in office. So
yeah, and we'll get to it in a couple of bullet points here too. There's a chance under this Trump administration that the SEC is functionally not the regulator of crypto anymore. Outside of it being a true security in some cases, I think that there's a path where, and more likely that it's the CFTC or it's self-regulated like FINRA. We'll get there in a minute, but it's kind of fascinating to kind of see how that may shape up. So our next topic, kind of a bit of a twist here. So Brad Garlinghouse, he's the CEO of Ripple. Obviously, we've talked a lot about him and Ripple with this case going on with the SEC. He's going to be on a 60-minute interview. I believe it's going to be aired December the 1st. I've seen it posted the 1st, and they retracted, and they said, so who knows? It's coming soon. And it sounds like a lengthy interview as well. And just about how like their fight for from clarity from regulations and the fight with the SEC. It'll be fascinating to kind of see what they go through and just kind of like, I would imagine there's a bit of a victory lap there for Brad. But this is really bubbling up to, this is not a topic that probably 60 Minutes talks about a lot. So
no, and I can just see now, like Sunday, everybody's recovering from a long weekend. They've had turkey, they've been having family and friends, and then you got Jim Nantz and Tony Romo calling the Sunday CBS game, and then they cut in with the 60 Minutes piece on Bitcoin. It would sure be nice if you're the producers and the people behind 60 Minutes if we hit 100,000 over the weekend.
Correct.
Right? And I think that story then does get run on December the 1st. I mean. They certainly are into ratings, right? So there's going to be a lot more people paying attention if you're going in over that $100,000 for the threshold.
Yep, absolutely. So the next one is probably quick. There's another issuer has filed for a XRP ETF. This one came from Wisdom Tree, so a name that some people probably have heard of. At this point, I think there's like 5, maybe 6 applications for XRP ETFs that have kind of trickled in. I don't think anything gets done with this side of the SEC. It's going to be sometime in spring or summer next year. But it's, I think that we quickly get an SEC that gives a framework at some point how these things, because there's thousands of tokens. Will there be thousands of crypto ETFs? Potentially. I think it'll take a while to get there. But more, I guess, this is what we expect to see. This is what the market needs to be experiencing before we can have an ETF on a particular digital asset. You
mentioned earlier, Robert, that the Bitcoin ETFs had crossed over 100 billion across all the issuers. Ethereum across all the issuers. Any idea, top of your head, kind of the?
I do not know the Ethereum AUM at this point. My guess is maybe 10, 20 billion, something like that. It's much smaller than Bitcoin.
Yeah, got it. Okay. I was just wanted to sort of know that number, because when you look at, if we get to a third ETF, like a spot ETF, what's the demand out there look like overall when you look at the total market?
Yeah, and this may be where I'm thinking about it too deeply, but you start to getting into assets with XRP. There's a Solana one out there and other things that one for Hedera. and there's a few others, but specifically XRP has got the most that is not yet launched. It is an asset that actually does something. You can use it for things versus just pure treasury asset like Bitcoin might be. Like, you start to wonder, does demand come from other places that wouldn't be there for, say, Bitcoin or Ethereum because they don't have a clear use case?
Yeah.
It'll be fascinating to watch play out. So.
Well, here I did a little bit of reconnaissance while we were talking. So it looks like there's a little under 10 billion in assets under management across Ethereum. I believe there's 8 different Ethereum ETFs. You know, Grayscale Ethereum Trust ETH has 4.7 billion, and then you have iShares, the Ethereum Trust from BlackRock, which is about 1.8 billion. And then there's a number of others, you know, Bitwise, Fidelity, Van Eck, that are, you know, under 500 million. So in total, it's a 10th of the size of the Bitcoin, you know, overall AUM from the ETF standpoint. So just to kind of frame and give reference to, the market generally doesn't seem to either understand or put value on, you know, the app store of crypto, which is kind of how I've heard Ethereum described. If you think about what's the utility.
And it doesn't help when you flip on CNBC or Bloomberg and all they do is have a ticker on there for Bitcoin, right? I mean, like, it doesn't do a service to all the other tokens. And that's the world we live in right now. There's not a complaint, just more of a reality. I think over time, Bitcoin still stays there, but like, you probably get more of a rotating ticker with other assets being shown. So so we alluded to this a minute ago. So the Trump administration apparently is rethinking how digital assets should be have oversight. Looks like they are maybe leaning towards the CFTC being the primary regulator, which makes sense to me. These things are commodities; they're not securities in most cases. And there's even like a hint that potentially we may end up with a self-governing body like a FINRA or a NFA that has multi-agency delegation. So it'd be fascinating to kind of see if it played out like that. And it may make sense because, again, some of these are securities, some of these are commodities, some are kind of a hybrid probably.
Right. Well, they're going to need to give this agency a lot more money because having been regulated by FINRA and being a part of a platform, we own an RIA and a BD, and we're regulated by a state regulator for the RIA, but FINRA for the broker dealer. And the agency, because it's it's a self-reporting. You pay fees into FINRA. They provide continuing education. They provide oversight. They do exams. All this type of back and forth. And the reality is they just can't keep up with developments in the market. And the reason for that is that they don't. Number one, they probably don't have the budget they need to do the type of enforcement to keep up with market developments. And that's just in terms of call it the retail investor and the broker dealer community. My initial impression is they're going to need a bigger budget at the CFTC, and they're going to need to really staff it and be tightly integrated with the industry, because the industry is developing so quickly. There's so many advances that happen. How do you put, one thought is how do you just put an infrastructure in a sandbox, use your word earlier, around this space so that they can be more self-regulating, but at the end of the day can create value for customers, for investors, or create investment opportunities that are, legit, right? So that there isn't, because there are still Ponzi schemes and there are still bad actors, even with FINRA, right?
Absolutely.
And not all the bad stuff is caught. It's just thinking how my experience being regulated for 20 years, the challenge, like when they start to issue an update on, say, crypto, it's a year or two after so many people in the market have already started just, participating in that asset class.
Right.
So they just have to find ways to be quicker and more agile, and that's going to require capital, money.
Yeah. My suggestion is to figure out what the SEC is spending on crypto right now and take that money away from them and use it elsewhere, because it's probably better used. Because I know they're spending a ton with all this enforcement actions, because those are expensive attorneys.
Yeah.
Anyways.
Well, that's going to be something to watch, because you don't see a lot of these regulators get the budgets they want. A
Mhm.
lot of times it's appropriated, and it just seems like they're always, underfunded. And then there's just not a lot of agency spun up, right? With the
Correct.
new Doge agency, they're
Right.
wanting to cut government,
Mhm.
right, costs. So we'll see. There's going to be a lot to figure out in 25.
Yeah, it should be fun to kind of watch from the sidelines of sorts. So
Yeah,
our next topic is tornado cash. We've never talked about tornado cash, I don't believe.
yeah, yeah,
Is a Fifth Circuit ruling this I believe early this week or maybe late last week, where it was a win for crypto. We'll say that up front. Coinbase has largely been funding this lawsuit. Tornado Cash. So what is it? Tornado Cash is a software code that runs on blockchain. You would send funds to it, funds being crypto, and it literally mixes it with other funds from other people, and then it sends it out the other side. The idea is it's a privacy mechanism. You would see the Elizabeth Warrens of the world say this is only criminals are using this because this is money laundering
hmm
and all that. But the U.S. Treasury sanctioned Tornado Cash. I believe the guy that wrote the code, it's open source, run on. He didn't have control once it was running. He's still in jail, being held, in my opinion, unfairly. And so the Fifth Circuit ruled that they went above in they were unlawful. Smart contracts are open source, and it's a big deal. This is a big win. I think this one's going to fly underneath the radar generally in crypto, outside of just Tornado Cash wins. But this is a big privacy win for crypto.
Well, when you describe it as, and there's probably a really elegant description somewhere out there that I need to go get smart on, but when you described it as taking crypto, putting it in a tornado, mixing it up with a bunch of other crypto, and then spitting it out the other side, I'm thinking, what's the use case? There probably is one, but
Yeah,
that's always part of the thing when you come to these things late and you haven't been following the case. Clearly, Brian Armstrong and the Coinbase people are smart; they know what they're
yeah,
doing when it comes
right.
to crypto, so they wouldn't have funded the case if they didn't see value and utility.
Yeah, I think at the end of the day, this is a privacy mechanism for crypto, right? Like
Okay.
if you want to say that, if you have, say, Bitcoin on Coinbase and you send it to a wallet, well, that's pretty traceable with a
Yeah.
court order.
It's kind of the
Um,
equivalent maybe to a dark pool in institutional investing where they don't trade through calling up, somebody on the floor of the exchange,
mhm,
to move 1 million shares of XYZ. It's all done off market in
mhm,
what's called a dark pool. So there's anonymity. It doesn't
right.
affect the price. There's all sorts of actual commercial reasons
Yep.
why they do that.
I would say similar. And another analogy is it's in a lot of ways taking crypto and making it like cash.
Yeah.
Cash, if I hand it to you, no one knows that we made that transaction. You have it, I don't,
Yeah.
and it's
Okay.
anonymous. I think it's very similar in that nature for crypto. So you would
Right.
have a wallet on Coinbase. You would send the money to Tornado Cash. It obviously understands that's where you send it, and then Tornado Cash would have another wallet address it would send it to on the other side. So your identity basically it's stripped, or
Yeah.
the trail gets kind of broken there effectively.
Now this
Yeah.
did come, and we don't have this in our headline or check-in, but this does come on the heels, or maybe was just before it was announced. I think one of the court system did announce that the cartels were using
Mhm.
certain crypto for laundering
Correct.
of illicit, proceeds or illicit drug,
Mhm.
and just other
It's
illegal,
nefarious
nefarious
things. Yeah.
activities. I don't know a lot about that specific case, but
Mhm.
yeah, clearly these organizations, the ones that are, have a bad intent, they're gonna
Mhm.
be embracing the latest technology. There's
Right.
also the rest of us who are thinking, how can I use this technology? How can I do this? Like you said, pay somebody, the equivalent of cash and just do it via crypto, and it's nobody else's business.
Exactly.
Yeah.
Yep. So moving on, Chris Goncarlo. He's in my opinion, a well-respected guy. His pseudonym is Crypto Dad, because he did a lot of work at the CFTC under Trump's first term.
Yeah.
His name has been floated potentially as an SEC chairman. I don't. My guess is based upon the comments he's saying now, he's probably not in the running, because he said, in his opinion, he would drop the SEC case versus Ripple. I don't think somebody in the running would say that.
Right.
Might say that privately, probably not publicly.
Maybe it's a way to
But
take yourself out of the race.
right, yeah, exactly. But at the end of the day, it's just more people are starting to share their opinion publicly about just kind of like craziness that's happened the last approaching 4 years at the SEC with regards to crypto.
Yeah.
So, he was on another interview that I was listening to where he was like, if the U.S. has a strategic Bitcoin reserve, probably should also have other cryptos that are as part of that, make it a basket. He talked about Ethereum. He talked about XRP. So I don't know. Let me just kind of see how this works out. The Bitcoin people would not be happy about that. To them, there's one crypto to rule the world, and it's Bitcoin.
Right.
But I think that it's more realistic to think that you might stockpile other things. The U.S. has got oil. It has other things that it cares about. It also stockpiles. So
sure,
here we are.
Yeah, we care about renewables. We care about natural gas. We care about coal. We care about nuclear. I mean, yeah, there's a lot more than just big oil.
Yeah. So our next topic, I'm surprised we're talking about this right now, admittedly. So the Fair Shake Crypto PAC, they had a huge influence on promoting candidates in this last election that were for crypto on both sides of the aisle. 48 of 48 candidates we've talked about that they supported were elected to their seats, which is pretty amazing to hit 1,000 on that.
Yeah.
And so Ripple has donated another 25 million to this. And as of going into the midterms for 2026, this PAC has $103 million they're ready to spend. Like, in some sense, I wouldn't say they're doubling down, but they're keeping the pedal to the metal, trying to make sure that this is not like a blip in the radar for positivity with regards to crypto in Congress.
Yeah, I mean, they're putting money to buy that influence, or at least to have a conversation with those that can, enact the next set of laws. They're going to take this industry, and many believe, to retail, to new markets, to get the banks involved. Right. That's the amazing thing. You said the market cap is $3 trillion for Bitcoin, and
largely crypto period.
For crypto period. Sorry. So, but largely, if you were in a room of 100 people and say, how many of you are actively doing crypto or involved in crypto? If that room was full of banks and insurance companies and everyday individual Americans, still be a lot of people that are skeptical, still be a lot of people that aren't participating,
100%. Yeah. It's early days. And, I would imagine that even 2 years from now, we're not fully feeling like we have the right laws and everything that we want in crypto. I would love to be wrong about that, but I think that the midterms are going to matter for crypto. And maybe by the time that Trump has had his 4 years, that maybe we can have this all set and feel like we are where we need to be. So I guess we'll have to have a time machine and come back and we can finish this conversation.
Well, and the reality is even if you are in a better run rate, in terms of regulation, market participation, the guardrails, the frameworks, all the things that, protect investors and protect capital and ensure that, you're putting your hard-earned money, right, in an institution like, say, a bank, right? All the banks pulled out of lending, okay? And those banks are regulated by the FDIC, they're regulated by the OCC, they're regulated by countless institutions, and so the idea is, are banks going to get back into the crypto business, right? And they're not going to get back into the business unless they feel like there's regulatory clarity. And so for all these reasons, you think, okay, in 3 to 4 years, have we fixed that? Probably. But are all these regulators that regulate the energy industry, regulate the drug industry, regulate the food industry, I mean, they haven't gone away. There's constantly a back and forth between, too much regulation, not enough regulation. I think we all have to just get our heads around the fact that this industry is quite early. We are trying to figure out quite a bit. And, from the standpoint of where are we in 4 years, it's going to look a lot different than today. It's going to look a lot different in 40 years, right? So you got to be playing the long game.
Absolutely. And in some ways, we're swimming upstream because this is the administration that wants to cut regulation, but we're saying, please give us some. So it's a bit of an opposite in narrative there.
It's kind of a dichotomy,
Yep. So our second to last topic here is the Schwab CEO was interviewed recently and about crypto, and the quotes were pretty. This is at the Schwab conference, to be clear.
Right, Schwab Impact.
Yep. And the first quote I have here is, "I have not bought crypto, but now I feel silly." That's a pretty interesting comment.
So I mean, big bank coming in. Obviously, Schwab is hugely important to the financial industry from the standpoint primarily of supporting not only retail investors who go direct, right, who go
Mhm.
open up a Schwab account, set up an IRA, set up a brokerage account, invest in stocks and bonds and mutual funds and ETFs, but equally the number of advisors that they support, right? So folks like us who use Schwab for custody and technology and investing and all the support that they offer to run a wealth management organization. Um, and for many, many years, they were just against crypto, right? And they
Mhm.
just probably
Or
said
they
there's
wouldn't
not
even
a
talk about
business.
it, period. Yeah.
They just wouldn't want to talk about it, right? So
Mhm.
what did those advisors do? They had to go somewhere else, or they had to go take those assets away, or just tell their clients, sorry, we can't do it. And that's
Mhm.
why we came back to the stats we mentioned in the episode maybe 6, 9 months ago when I'm at these conferences, and there's hundreds of billions of dollars of assets held away from
Mhm.
the custodian for a wealth advisor. That means the advisor may manage $1 million for a client, but the client may have $250,000 at another institution that
Yeah.
that advisor is not collecting on. Schwab's not making any money on, and they want to now
Mhm.
bring all that back. And I think it's also interesting that Rick Worster said not only did he feel silly, but he recognizes that investors are the younger investors are the investors that are the earlier adopters of crypto. And if he
Mhm.
wants that younger investor base, that under 40, under
Right.
30 client, not go to Robinhood, he's got to
Sure.
offer them products.
Mhm.
And if he wants to attract the next advisor to say, we're going to leave one of the big prime or one of the big wirehouses and go set up an independent financial planning, financial advisory practice, and I'm trying to figure out who do I want to work with, and
Right.
you're saying we don't do crypto, you're probably out of the running. You're going somewhere else. So he's got all
Mhm.
kinds of reasons to start thinking about how to embrace this, but it comes down to money and it comes down to
Right.
regulation. And they probably now feel like there's a better chance of regulation than they did 3 or 4 years ago. But yeah, I mean, I don't think it's too late by any stretch, but I think it's a powerful move by a big important player. And I think that as you start to see retail adopt crypto, and that whether that's them leading and dragging this institution in or vice versa, it's
Mhm.
an important move when that type of institution decides to go into the space.
Absolutely.
But as you have always said, Robert, pay attention to what they do, not what they say.
Mhm. Yes. At least that's the mantra that I like to march
Yeah.
to. Our last topic, kind of interesting timing here, and I think it's the right timing. So crypto's got these cycles, these crazy run ups, blow off tops. It kind of comes down a lot of times 80, 90%, kind of a stair step approach over time. And if you look at the past, assuming we kind of enter the same kind of cycle, which I think you can make arguments that this cycle potentially is going to be different, and elongated and all the different reasons because you have institutional money coming in now. But set that aside. You potentially are right around the market cap now. What you might experience is the bottom once we go to a blow off top and we kind of have that sell off that kind of brings us back down. So if you hold crypto and you want to hold through it, the prices that you see now might be what you see in 2 years
Mm.
after a huge change in between. So kind of an interesting
Yeah.
little, I guess, observation there.
Yeah. Yeah, for sure. Well, lots of headlines. I guess that can happen when you don't record in two
For
weeks,
two
but
weeks.
also I think it's an indication of the amount of participants that are weighing in, are spinning up and or doubling down or entering the space, right? All of which are worth covering in a check-in.
Yeah. Well, thanks for joining us on this episode of the Weekly Crypto Check-In. If you want to stay updated on future episodes, you can find us in any podcast player by searching Teton Crypto Capital or the Weekly Crypto Check-In. Take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.